Good afternoon. I hope everyone's doing well today. I want to address some of the concerns over the recent Ukraine-Russia conflict and the additional volatility this has caused in the stock market. When the news broke that the U.S. told Americans to evacuate the Ukraine, of course, this was a clear indication that the escalated tensions between the two countries. So U.S. stock traders, they sold off, which I'm sure you're aware of, Friday afternoon. So the escalated tensions now added to the worry list, along with interest rate increases or forecasts of interest rate increases and higher inflation. These headwinds, they're going to continue to cause volatility, and they kind of support a sideways trading range in stocks. And until some degree of certainty is reached, we will have that trading range. So next month we should see some of the uncertainty subside around all three of these issues. Well, actually this week we'll see something on Russia and Ukraine, most likely. The prediction is Wednesday we're going to know something on that. But the interest rates, the Fed will have a meeting March. They're going to determine what kind of interest rate hike that will be for March, and at that point, then of course that'll feed through to the inflation, and hopefully start to see that back up a little bit. So the consequences for Russia, if they choose invasion, that's going to be sanctions by the West and then by the EU also, or most all of Europe. So that's going to hurt their economy, and the big one that'll hurt will be natural gas sales. The EU, Russia's by far the biggest supplier of natural gas to the EU, and that's going to cause some problems for their revenue stream and obviously their economy. So we'll see. I guess the U.S. will probably fill that void and try to supply natural gas to the EU at that point if it goes that direction. So our economy is still going and still growing, and one of the reported earnings growth that we've seen for the last quarter, we're about halfway through the earnings season, and we've seen some really good reports from some of these companies, and I think that supports the fundamentals of our economy being strong and our economy really continuing to grow. So we're going to continue with that theory, and we're going to stay bullish the stocks and continue to support the economy here in the U.S. with that. As far as the stock market effects based on the Ukraine situation, it'll probably affect the European stocks a little more if Russia decides to invade. It'll obviously continue to affect the stock for the energy stocks and all of the commodities as far as that goes. So those are the impacts on it so far, and I don't see it really having a huge impact on the stock market for us if we're mostly invested in U.S. stocks, quite a bit of them anyway. So we'll continue to monitor the situation, but at this time we don't want to sell into that. So thanks, and have a great week.